Hey, there's a lot of noise out there about making money, paying off debt, and investing, especially for physical therapists or new grads. But the reality is that there are some really basic rules of personal finance that you absolutely need to know before you go do something stupid with your money, like start trading options or buying whole life insurance policies. So let's dive into the top 9 financial tips for physical therapists. Hey, welcome back to the channel. If you're new here, I'm Tim Fraticelli, and on this channel we love talking about personal finance and tips to improve your financial health, especially if you're a physical therapist, but even if you're not a PT, you're welcome to stay. I hope you do, and subscribe because we have new videos for you each week. Okay, so on to number 1. The first financial tip that I want to share is this: speculation is not an investment strategy. Look, we'd all love to have a ton of wealth and huge returns from the stock market. Pick the winners, forget the losers, double your money. The problem is that even the highest paid investment managers on Wall Street have a difficult time beating the market. And you can learn more about investing in mutual funds, index funds, ETFs in this video up there. But instead of trying to time the market, we need to focus on time in the market, because a long-term strategy, those are proven strategies to work when it comes to investing. Look, if you were just to miss just 10 of the top trading days from 1996 to 2011, your investment returns would have been cut in half from 7.8% to 4.1%. That's a huge price to pay for trying to time the market. And that's why investing in index funds for the long term means that you're going to capture the wins and the losses naturally and avoid stupid mistakes that are usually caused by emotional investing. Trying to day trade stocks and to use options to make extra money is one of the dumbest things you can do with your money. So the first tip is that speculation is not an investment strategy. Tip number 2 is to pay yourself first. A lot of times I hear this question: hey, I want to start investing, where do I begin? I usually recommend that people start with their 401ks or their 403bs at work, especially if they have a match. That match is free money, and it's going to be the best return on your investment that you'll have immediately. And once you've put enough money in to get the match, then you can look at maxing out your Roth IRA, and after that, you could add money into an after-tax investment account. I use Vanguard, but I've also used and I've recommended Betterment for my investment accounts. But here, the ultimate goal is to pay yourself first and to aim to save 15 to 20% of your income in total and to treat it like an expense, paying yourself first with every paycheck. Now, you can do this automatically with your 401k, and you could easily set up automatic transfers into your IRA with Vanguard or Betterment or whatever brokerage account that you're using out there, because when you automate your savings and your investments, you are dollar cost averaging into the stock market, picking up on the low days and the high days with every new contribution that you make, which is one of the smartest ways to build your wealth and to build your account over time. It's not glamorous, and there's no magic bullet here, but if you grasp this concept to pay yourself first and to aim to save 20% of your gross income from the start, you're going to be on a solid path to meeting your financial goals. Number 3 is to diversify your income. And yes, this includes things like starting a side hustle or a side business, whatever that looks like, whether it's in person or online. But you've got to think outside the box here. And for a physical therapist, you might consider taking multiple PRN jobs instead of just a single salaried position. Or you might try supplementing your income with a home health gig on the weekend as a way to generate extra income to pay off your student loans even faster. Maybe you're creative and you have new ideas or ways to present concepts, so you create a resource and sell it to the public so that you stop trading hours for dollars. There's a lot of ways to do this, especially with low upfront costs. If you're interested in creating online businesses, we're talking like $10 for a domain, $3 for web hosting to get started. And if you're curious about diversifying your income with a blog, you can read more about it on the PTProgress blog, and I'll link to that in the description. And if you're interested in learning more about that, you can watch this 5-minute video up here on how to start a blog on a budget. Number 4 is to be leery of financial experts. You've got to know who you're talking to, who you're taking financial advice from. What are their motives? What's their experience? Are they selling you something? What are they selling? Are they selling insurance, or are they a fee-only financial planner? And realize that being a financial advisor doesn't mean that you're a certified financial planner. A certified financial planner, or a CFP, is the highest designation for financial planning out there. CFPs have a fiduciary responsibility to act on the behalf of the client. CFPs are held to the standard. Not everyone is held to the standard, so be careful who you're talking to and who you're taking advice from. Heck, you should even question what I have to say as well. Even though I do my best to present information that's in your best interest, you still need to take the time to understand the information that you're reading online or watching online. So be careful with these experts out there. Are they selling you something? What's the value that they're giving you? And can you learn it for free? And look, I'm all about learning from the experiences of others and investing in yourself. I take courses all the time to learn new things, but I'm always cautious of these pop-up entrepreneurs who promise big results because they're weekend experts. I'm just tired of seeing it, and you can trust that I'm not going to recommend something unless I've used it or 100% believe in the product, because the bottom line is this: you need to be leery of these so-called financial experts because they don't always have your best interest at heart. Number 5 is to create systems for your money. The first thing that comes to mind for most people here is to create a budget, and yes, that's a huge component of your financial system, but it also includes creating a balance sheet, monitoring your cash flow, and to implement automations for your financial goals. I have videos for all of those elements in the financial health playlist, so if you're interested in using the same spreadsheets that I use to track all these things and to create systems for my money, you can download them below as part of my financial bootcamp, and it doesn't cost you anything. I'll just email them to you for free. They're a great resource to help you create smarter systems for your money. Now, you've heard me talk about saving automatically into your 401k or setting up automatic deposits into an investment account like Betterment to meet your financial goals. But if you're interested in learning even more about automating your financial life, I'd encourage you to check out the book, I Will Teach You to Be Rich by Ramit Sethi. He goes into some awesome strategies for saving, investing, and increasing your wealth through automatic systems and with mindful spending habits. I definitely think it's worth a read, and I highly recommend this book. Number 6 is to create an emergency fund of 3 to 6 months. Now, exactly how much you should have in your emergency fund, that really depends on a handful of factors like the number of incomes that you have in your household and the volatility of the job market that you're in. And typically, a dual income family would want to save at least 3 months of expenses, while a single income household would want to have at least 6 months in their emergency fund. And for a single physical therapist earning $65,000 to $70,000 a year with $3,000 a month in expenses, a fully funded emergency fund would be around $18,000. Now, if they're married or have a partner and they have the same expenses of $3,000 a month, you might be able to get away with just having a 3-month emergency fund of about $9,000 because you have both of those incomes. But if we've learned anything in 2020, it's that jobs aren't guaranteed, especially when you have a hands-on career like being a physical therapist. So take your emergency fund seriously and fill it up as fast as possible. Okay, on to number 7. If you're still here, I know you're really interested in taking your finances seriously, and I'd love for you to subscribe so that you don't miss any future videos, especially these financial videos. So number 7 is to get term life insurance. Look, life insurance is boring, and to be honest, it should be simple and boring. And one of the most basic types of insurance that you need is life insurance. And you're going to find 2 basic options to consider: term and whole life insurance. And while I'm happy to go over the differences in another video, the short answer is to just get a term life insurance policy early in your career. Having a term life insurance policy means that you make a payment for the entire term of your policy, usually 10 to 20 years. And if you die in that period while you're making your payments, the beneficiaries will receive an insurance payout. And that insurance payout depends on the amount of term insurance that you purchased, whether you get a $100,000 life insurance policy or a $1 million life insurance policy. If you die, that policy will pay out that amount to your beneficiaries so long as you've been making those payments. And that's just the general nature of life insurance. You pay for a policy in case you die, and if you do die, your beneficiaries collect a payout. The life insurance payout is there to take care of your family, your beneficiaries, to help pay off your home, to cover immediate expenses of your estate, maybe to help pay for your children's education. And where it gets messy here, though, is when insurance salespeople try to sell you whole life insurance, touting the benefits of a cash value and built-in retirement savings mixed into one fancy little product. Please don't fall for these pitches with whole life insurance policies. Sometimes these policies are called permanent life insurance, and they're notorious for being expensive, confusing, and just flat out sold to physical therapists because of the high commission rates that are paid to the financial advisors or the insurance agents who sold it to you. Just remember this: keep your investments and your insurance separate. If someone's trying to mix the two together and convince you that it's a smart financial move to have an insurance product that's also an investment product, just run. Don't take their advice. Don't feel pressured to do business with them at all. Just say thank you and move on. And if you're interested in term life insurance, just a simple policy, you can do what I did. I went to termforsale.com. No, I'm not an affiliate, but that website is super easy to find an inexpensive term life insurance policy without worrying about getting hosed by an insurance salesperson. I'm not affiliated with them, but I did use this site earlier this year to purchase an additional term life insurance policy for my wife and I, and it was really simple, relatively cheap, and it's really easy to do. Number 8 is to get a student loan payoff strategy. Now, I know student loans are really annoying, and they're probably one of the biggest expenses that you have each month, But a smart student loan strategy is really pretty simple, and it has 3 basic components. One, you want to refinance your private student loans to the lowest interest rate possible. I did this through Credible, and if you go through the link ptprogress.com/credible, you can support the channel and you can get the lowest rate possible with your private student loans. Number 2 is to consider an income-driven repayment option for your federal student loans. And number 3 is to live like a student until you've paid them all off. And yes, I know that there are forgiveness options, and really the only attractive option that I like for physical therapists is the PSLF option, and I've written about it on the blog, and you're welcome to read about it as well. I think it can be a great option for PTs with more than 2 times their salary in student loans, especially if you're already working for a qualified employer. Now, I think the 20-year forgiveness option is just too long, and the tax bomb makes it unattractive for physical therapists, in my opinion. But either way, when you've put the previous tips that I've shared into action by automating your savings and diversifying your income, paying off your student loans should happen a lot quicker that way. But don't ignore options to refinance your private student loans and to use federal repayment plans to make it easier for you to manage those payments with possible forgiveness through PSLF. And number 9 is to track your numbers. And this includes tracking numbers like your net worth, your credit score, even down to the fees that you're paying in your retirement account. You've got to know these numbers, or at least look at them once or twice a year. And I track my numbers with Personal Capital. I recommend tools like Mint.com and You Need a Budget to start tracking your numbers automatically. And you don't need to obsess about these, but you can't ignore them either. And in future videos, I'll break down ways to improve these numbers like your credit score, your net worth, and how to reduce unnecessary fees. So make sure to subscribe because you don't want to miss those videos. But really, the best financial tip out there is just to keep it simple. If it sounds too good to be true, it probably is. Insurance should be boring. Investing should be boring. The old saying of slow and steady wins the race, it really does apply to investing. But remember, investing is only one component of your financial picture. We've covered 8 other tips outside of investing that are just as important. So I hope these financial tips help you to understand some of the basic principles of personal finance and give you a bit of guidance as you work on ways to improve your income, decrease your debt, build your net worth, and ultimately create smart financial systems that help you improve your financial health. And if you're interested in tracking your finances better, you can download the free worksheets I use by clicking in the link in the description below. Hey, thanks for watching. Don't forget to subscribe and to like this video if you found it to be helpful. Thanks again for watching, and I'll see you next week.